Crude oil has once again hit another historic high. Prices traded at their highest level in 7 years recently, and there are calls for $100 per barrel coming. Is this a realistic target? Welcome to our market analysis videos here at Zenfinex. For those who are new to the channel, my name is Con and I'm the senior market analyst at the company, providing to you daily videos on market analysis and also educational content. Now for today's video, I'm going to be covering a crude oil forecast after reaching their new highs, and to do this, I'll follow our reliable format of a fundamental and technical analysis. Okay, so as it stands right now, the price of oil is up around 13% since the start of the year, and I think they're quite impressive gains for just 6 weeks of trading this year so far. Now, Goldman Sachs are actually predicting $100 per barrel by June this year, and there are a mix of reasons that really are creating quite a bull environment here, which we're going to go through now. First of all, the demand outlook continues to grow stronger as more and more economies all over the world recover from the pandemic slump. Of course, higher demand will lead to higher prices if the OPEC Plus cannot curb this with higher supply. This has been a real issue recently too. Production has been consistently increasing in the reports that come out each week. However, the concern is that the OPEC and the OPEC Plus will not be able to keep up with the rapidly growing demand outlook that we're seeing in economies at the moment. Now, with demand outstripping supply, outweighing supply, this is going to cause something called market inefficiency, and it could actually escalate prices even more. The more the market thinks this at the moment, the more traders are likely to see oil prices rising in the short term. Now, to make the bull case even stronger, there are still these significant geopolitical tensions at the moment, specifically referring to the Russia-Ukraine unrest at the moment. And the latest news is that the Russian President Vladimir Putin has warned European countries will be drawn into military conflict if Ukraine joins NATO. Now, it's thought a Russian invasion of Ukraine could be imminent as well. But looking at the other side of the story, oil prices have slipped from those highs over the last couple of trading sessions. You'll actually see that every time oil does actually create that new 7-year high, the drop-off is actually quite sharp from there. Something really important to monitor over the next few weeks are talks between the US and Iran, which are progressing at the moment. They're actually looking to revive a nuclear agreement dating back to 2015, I think, that would allow basically more oil exports from the OPEC producer. Now, in fact, a deal between these two countries would allow, it'd actually give the crude oil market support of around 1 million barrels per day of Iranian oil in supply. Now, this deal could finally be met, which may be of interest actually to both parties, considering the elevated price at the moment. But in my opinion, this potential deal between US and Iran does really hold the key to whether oil prices can actually reach that $100 per barrel mark or not. Either way, let's take a look at that chart and mark some key levels. Okay, then, so I'm on the chart now for US crude oil at the moment. As you can see, we're consistently really breaking this $85 mark, which was going to be really significant resistance back when we saw it back in October of last year. Since then, we've made it numerous times. We've created these new 7-year highs, and the last couple of trading days, we've seen that again when we actually reached as high as that 93.17, which of course is going to be a key level for us. At the moment, I'm going to mark it as any potential buy and take profits for now. Over the last couple of trading days, we have seen the price dip off somewhat. If I actually put in maybe the relative strength index, we can see what we're looking for at the moment. As you can see, we are actually in this overbought territory at the moment, but there is also this clear divergence that we can see between the price action and also the RSI indicator. As you can see, price is moving up quite significantly, but the RSI is remaining fairly unchanged. This is quite a bullish sign as well. So what I'd like to see for oil at the moment is I'd like to see, first of all, a filling of this, you can see this small price inefficient gap that we can see here from that recent upwards momentum that we had. If I actually mark that as our FVG, potentially what we could see is the price actually fall in, maybe test the bottom of this FVG, and then we can look for any buying opportunities. And if I was going to go long at the bottom of the fair value gap, I'd have my stop loss probably just sitting below the $86 mark. I'd say this is quite an aggressive trade, really. And really, for buy and take profits, I mean, I can't see us reaching that $100 per barrel mark in the next couple of weeks. I think the movements are going to be a lot smaller. So if I go onto the 4-hour chart, we'll be able to mark something a bit more clearer. So there's that price inefficiency we saw. What I'd like to see is, you can see we had this expansive move to the upside here. Oh. We can see that break of structure that we had, and you can see that this is quite powerful buying pressure here. This is actually probably institutional buying that we have here, which really leaves behind a nice order block level that we can actually buy from. Now in this order block, I've used the body of the last bearish move before we had the move up. I've also wanted to cover the wick that we can see, which actually took liquidity to the downside here. So I've marked this as our order block entry level, and this is a position, this is a trade that I'm going to be putting on at the end of this video. I'm going to have my stop loss sitting around the 86 mark, entries around 87.7, and really what I'm going to be looking for is aiming for that high up at around 90. Is it 93? Yeah, it's about 93. As a whole, it returns around a 5 risk reward trade, which is a really nice trade. It would require this obviously price to drop down into this level first before we can look for that buy to the upside. Alternatively, people may want to wait for a more of a should we say a break of structure on a lower time frame and use this level with maybe as just a point of interest, and actually wait for a break of structure on a lower time frame first before we go to buy. But I like this level. I think this is a really strong institutional buying which left behind price inefficiency, which I'm looking to fill. As a whole though, I still want to stress that I think that these talks between US and Iran are really going to be holding the key to whether we actually do ever see this level again, this 93 level and above, in the next, say, few weeks. If talks progress, then of course the market's expectations of supply not being able to keep up with the demand is going to fall significantly, because we are going to see potentially an increase of around 1 million barrels of Iranian oil. But until then, for me, this is still a bull market. There's still that imbalance between supply and demand at the moment. We've seen talks resume between US and Iran before, and they fell through. So I'm not going to be getting too excited just yet, and I'm going to be looking for any dips on the chart for some buying opportunities. I hope this makes sense for everyone. I hope everyone's enjoyed this video. Make sure you've given it a thumbs up. Make sure you subscribe to our channel as well, and also drop any comments in on the comments section on where you think oil is going for the next few weeks. Other than that, I hope everyone has a great trading day. Take care, and I'll catch you all for the next forecast video. Cheers.